Congratulations! You just received a financial windfall, a bonus at work, a substantial inheritance, a tax refund, or a break or pause in a debt you owe, like the recent student loan repayment pause. This video delves into a variety of options and best practices relevant to the money breaks you may get in life. Imagine you've been given a form of financial space, breathing room. What would, could, or should you do? These tips I'm about to share apply to any money break you or a loved one might get in life. We could possibly title this, How Not to Screw Up the Student Loan Repayment Pause. You might think you're on Easy Street and getting a pass just to chill out, but it is really an opportunity to make big financial strides. And most Americans with this recent multi-year student loan repayment pause that tied to the pandemic and other things miss this golden opportunity. During a deferment, interest doesn't accrue on many types of direct loans. During a forbearance, the interest keeps piling up and accruing on all types. But it could be just a temporary postponement or a reduction. Now, one might call this type of pause, this loan pause, a perverse incentive or a temptation to get that free lunch. It is a freebie. But what should we do with financial freebies? They are rare, but they can come in many forms. Now, you're watching What's Next with Money, a program with smart insights to guide your financial decisions. We will look at the student loan suspension pause, the government freeze, but with tips on what you can do that is positive for your money and your life. You know, when you think about the student loan situation, it was kind of like promises made and some promises unfulfilled. The student loan pause kept getting extended far beyond the COVID emergency. And there were some political leaders kept doubling down on promises. But the Supreme Court had the final say in many loan forgiveness situations. And that say for many of the plans was no. But of course, we had the fall 2023 restart for most student loan interest and payments. And now there's many variations, but one's called the new SAVE plan, which is an enhanced income-driven repayment plan. This is really for direct federal student loans. And folks, this is being challenged in the courts as well. And if parents took out a Parent Plus loan, unfortunately, none of those are available for these breaks. But here's what's really interesting. What did many Americans do during these student loan pause extensions and promises? Now, some paid down high interest debt like consumer debt, credit cards, but others, and I'm not saying all this is bad, it depends on the earnings, the goals, and the debt level, and spousal or partner coordination. Some splurged on vacations, like this person that took a Southwest airline that looked like Shamu. Some did expensive home renovations. Some bought cars. Some leased cars. Some went for another degree, using more student loans. Now, many student loan borrowers are facing what we might call a student loan financial cliff. A recent Fidelity survey just before the restart indicated that 2/3 of borrowers do not know how they'll resume making payments. Now, check this out. They've not been making payments for years, and 2/3 don't know how they're going to restart. It's not in their budget or their cash flow. At least they're not seeing that. Thus, many borrowers are in worse shape with these obligations than before the pandemic. Check this out. According to TransUnion, 50% of student loan borrowers added bank credit card debt during this period, and 36% got new car loans. 15% got new mortgages, which is not that bad. That's probably a good idea. But now that interest rates are higher on many of these debts, there's less money or liquidity to pay all these obligations. Now with the student loan restart. In this, plus we have the higher inflation environment, kind of a double whammy. The New York Times reported on a young couple with $175,000 in student debt. They added a bathroom to their house, did an 8-day Walt Disney World vacation. And folks, I used to work with Walt Disney Imagineering. I have never taken an 8-day Walt Disney World vacation, but they did this during the payment pause. And now they worry they will not be able to pay their kids' college tuition or even save for that later. Now, don't hate on me for calling this out, but here are some more facts. Student loan borrowers were more likely to have higher incomes, yet subprime credit scores. But non-student loan debt borrowers or holders had fewer delinquencies during the pause. Now remember, during COVID, a lot of Americans spent less. There wasn't that much open, and we saved more. And really, the net worth rose for many Americans. It was kind of it worked out pretty well for financial stability. But it seems for some student loan borrowers who went through that period and got the pause, delinquencies increased during the pause. Now, this is a teachable moment and really a semi-controlled experiment in financial management. During an extraordinary repayment pause, many Americans with loan payments suspended, student loan payments, did not come out better for it. Now, this to me just seems crazy. In fact, with this extraordinary windfall, they dug a deeper hole. The pause, which kept getting extended, often just for political purposes, and then the timing of the midterm elections in 2022, that was an unreal environment that promoted what really became a perverse incentive, offering a temporary new reality that was neither real or lasting. For many, this pause resulted in excessive spending, piling on more credit debt, which have no possibility of forgiveness. And folks, there ain't no federal credit card or auto loan forbearance program. Bottom line, according to many observers, a lot of folks substituted a paused public debt obligation, student loans, but for increased private debt. And I've got to say, and I've been on a federal advisory board with the CFPB, the Consumer Financial Protection Bureau, and advised the White House on financial literacy and financial empowerment initiatives. The government did not help. Worse yet, the messaging from the government, higher ed institutions, and student loan servicers was deafening. Few offered any tips or financial planning suggestions on what to do during this pause that was constructive or helped these borrowers with this break. And it could have been done in a very bipartisan or non-political manner. Rather than preparing them for the likely or the potential for the reintroduction of student loan payments and obligations. Now, much like this YouTube channel talks about ways to increase net worth and growing ownership through growing assets, paying down debt, not piling up consumer debt. Here's a list of financial windfalls people might run into in their lives. Winning a lottery, an inheritance, a year-end bonus, a retention bonus for staying with the same employer during a restructuring, a signing bonus, a huge investment game like the 10-bagger stocks we talk about on our companion videos, How to Invest in What You Know. And one of the windfalls could have been the Supreme Court actually upheld student loan repayment forgiveness. Now, if you're getting value from this video, be sure to hit that subscribe and hit that like button, and don't forget to share. Now, here's some tips on what you can do during a windfall. Pay off debt, consumer loans, predatory loans, get rid of those. Non-federal student loans you might have, and get help from an employer who may have a student loan reduction employee benefit. And this is new. The new congressionally passed, and it's now law, Secure Act 2.0 says a student loan repayment benefit can be a program offered by some employers to help with their employees and their student loans. Employers can provide up to $5,200 per year in student loan repayment benefit tax-free. Now, this benefit's discretionary, and some companies use it for recruitment or retention tools for highly skilled workers. And it's often more common among larger employees, but it's something out there that's growing. You can engage in the avalanche or snowball method of paying down debt. You can check your credit record for errors and work on learning how to increase your credit score, and learn about credit freezes, how to lock down your credit from thieves and fraudsters. Coordinate all these moves with a spouse or partner, and get on track with the 401k contributions to make sure you're getting that full company match. Coordinate this with your spouse to get the better and the bigger match of the two employers if you're on your way up to meeting the match. Like with any lottery or unexpected windfall, there are things you can do that are positive. And you can see our video called My Lottery Fantasy for more tips. You can get something fixed that annoys you or that hurts your productivity or wastes money. You can do home improvements that save money, insulation, HVAC changes. Get your car repaired. Out-of-pocket expenses for your health. You can learn how to fix something, grow, cook, do repairs and maintenance from YouTube. Exercise. You could up your nutritional savvy with healthy eating, shopping, and cooking. And you can look for and get training. This is like skills and certification for a better job, promotion, raise, or to lessen the chance you are laid off. A 529 plan is always a good thing to add money to for education for kids, but it can even be used by adults. And if you did not use it, much of that money over time under a new law can go to a Roth IRA. And this starts in 2024. Unused funds from a 529 plan can be rolled over to a Roth without penalty. And the rollover is subject to certain criteria. Now, the rollover is limited to a lifetime limit of $35,000, but this could really help with your retirement savings. And another thing you can do is see a certified financial planner professional or accredited financial counselor, a CFP or an AFC. We've got a super video on financial planning to match that. And you can, of course, watch What's Next with Money and check out our 8 video playlists that help organize our content like a library for you. Here they are: The Future of Money, Your Money Actions, Climate Disaster and Personal Finance, Get Financially Organized, Wealth Building, Investing for Ownership, Social Security and Retirement Decisions, Money and Your Life, and Closing Wealth Gaps. Here's something else you could do. You could get married. You could move to a new place with that windfall or state with more career and small business opportunities, including education, training, climate, taxes, and cultural amenities, and might be near family. You can get small business training, and you can see our small business success video, which is our second most popular. You could save for a small business startup capital. You could save for a house. You could save for a house down payment. You could visit family, find and visit a mentor, do community service. You could join a board to enhance your leadership skills and contacts and impact and learn about community issues. You could upgrade your technology, upgrade your interpersonal networking, sales, and public speaking skills, sharpen social media like LinkedIn, or get with the creator economy like YouTube, coaching, consulting, taking courses. We even recently had a channel audit from an expert on YouTube. You can make a dream board. You can see our video on planning your next career move. So next time a windfall or unexpected financial break comes your way, you know what to do. Like in the recent case of the student loan repayment pause. Consider and act on your options. What are some of the best practices to enrich you and your family's well-being without digging a bigger hole? Now you've got a list of actions to take, and your net worth, overall credit, relationships, and financial well-being will be better off. So be sure to hit that like and subscribe button, and thanks for watching. I'm Brent Neiser, looking to see you next time on What's Next with Money, and be sure to check out this video, Top 3 Do's and Don'ts for Building Wealth.